is being presented by Isabelle Delattre, who is one of the trustees at the interdependence Treasury and used to be the head of investments at Raymond James Asset Management International, which is an asset manager based in Paris. And they recently launched one of the world's first carbon momentum funds, so looking at the companies in Europe that were lowering their emissions the most year on year, and has been essentially working in this what's known as ESG, or environmental social governance space within the world of finance. That's often also referred to as sustainable investment, or SRI, socially responsible investment. And so Isabelle's just going to really give us a bit of context of that world and share some of her thoughts. So I'll hand over now to Isabelle. And if you have any questions, feel free to write them in the chat box and perhaps come to those at the end. Thank you very much.
Okay, thank you, Sam. Okay, thank you. So, hi everybody. I can see you, but I hope you can see me. I'm a French woman and actually in Paris. Thank you to be there. I try to explain my in ELG world a long time ago, and for it I have some slides. Okay, hear me. I'm an energy investor. That's me. Okay. So in this world, financial world, we try to explain this world can be disruptive if we speak about transforming our world in a sustainable world. And I think, you know, there is three main stakeholders to help our planet. There is you and me, so people. It's very important to move, to do something every day for the planet. The second one, stakeholders important, is the state. The state is important. The problem is that they take care of the planet only where there is a growth, in economic growth. You know, it's rich problems. So when there is recession or low growth, they don't take care. And a lot of countries are very indebted. So the third part of the stakeholders is the financial world. So we can, I try to explain you what was my experience in this world and how it was hard along to my friends speak about sustainability development. So at the beginning, it's a long time ago now, I was a financial analyst. And you know, you are just like you learn in your studies in university, you want to work in a traditional model, how to finance project, how to finance the project of the listed companies, and to put money in the right size. Okay, you don't care about nothing, just for make money. And I have a chance to move in a boutique independent asset management company in Paris. I have to take care of exactly what I do with the money of the clients, and I try to catch investors with the best risk rewards. For that, it was difficult because normally when you are a financial analyst, you have just to look on quantitative criteria. Okay, you know, the debt, the discount cash flow, the return on equity, margin, and everything. Okay, there's a lot of ratio, and it's very important for me. That was my responsibility to work a lot on qualitative criteria. lot, I don't know so much how I can quantify the profitability with ESG, you know, environment, social, and governance issue. So that is ESG models, you know, to invest in companies because these companies are very innovative, have a long-term vision and commitment with the shareholder. And sometimes we have chance to meet somebody very nice. In 1998, with a client, I have a nice meeting with Geneviève Ferron. Geneviève Ferron was a pioneer, and she helped me to be a pioneer also on that, on this social and environmental ratings. Okay, she used to be in the United States. It was very particular because in the United States you have vice funds. Okay, you can invest in vice funds, but also you can invest in sustainable funds. And when Geneviève come back to France, not really in Paris, but to France, she creates the first rating agency to study these topics. Okay, that was the agency was ARES. For people who know exactly, ARES is the before VGO, is more well known now, but we speak about that after. ARES, and I was the first client of Geneviève's because I was very interested by his words. Okay. If I can give you some ideas, maybe you have to read his book. She make a lot of book, but in 2008, I think she published a book very in 2008, yeah. She write books, and it's the name of the book. Let me, in Francis, so it's 2030, the ecological crash. And it was very interesting because she asked a series of incorrect questions. So that's why you can read this book. You know, it's when I make some studies, it was very interesting because I saw that a lot of people speak about sustainable development. But from a long time ago, for example, you have a British economist. We in 1920 speak about taxes that we can put on the production model to prevent damage in the production. Okay, that's very new for me. And for address my qualitative criteria, I need data. You know, when you are a financial analyst, you always study the consolidated accounts of the company. You never have a look on the social account. Okay. And remember, it was the beginning of the net. So we compute the brochure documents from the company, but not Google, you know. So it's interesting. ARES give me this opportunity to have a lot of data on the social aspect and environmental aspect. Why? Because, you know, you can read this Brundtland report in 1987, say, sustainable development is a development that responds to the needs present without the ability of future generations to satisfy theirs. Okay, it's very important, but at this time it was very political field, okay? And for me, we have to introduce in our practice to study companies and to study their future, okay? But, you know, it will have taken 20 years because we are in 2019, okay? The second chance, it was because I was an analyst specialist on some special sector activities. I have the opportunity to speak with the Chief Executive Officer of the group Clarence. It's an example very interesting because, you know, this guy was a doctor and his wife was has a disease, special disease. So he decided you know Clarence. Everybody know Clarence now because of skin care and for women and men now. And the doctors Courtin Clarence decide, because he decided to create Clarence to work on medicine for his wife. It was very interesting. He was involved of products, but not to destroy the planet, on the ecosystem, local ecosystem too. It was very pioneer too. And today, these two sons works in the company, and you will see it's the same. They take care. Okay. It was very funny when he speak to me. They want to launch a new skin care for men, and he said to me, we use some bison grass, big animals in the east of Europe, and it's very rare, and we need to put the ecosystem in place to provide future and local and human local and farmers and everything. I was very happy on that, but at that time markets don't understand nothing on that. It's a long process, okay? Because you see, normally sustainable investment is social, environmental, equitable, viable, and livable criteria, okay? But now, if we have a look, we are so far from the one we have now, because the later is not sustainable, neither equitable. You see actually between the difference between the north and the south, okay? Not viable, you see depletion, not reproducible natural resource. That's crazy. And all available, see climate change now, and greenhouse gas emission, pollution, waste, everything. I don't see you, so I hope you are not sleeping. So, my first experience was to how I can do something in a French institutional environment, because my clients was big company, it was pension funds, insurance, banking, family office, okay. So I try to explain that climate, social, and governance transitions, everybody have to take care, okay, and it's an urgency. If you think it's great, some days ago, for example, the country of the Finland, decide to be carbon footprint neutral in 2035. Yes, I know it's a small part of the world. Okay, it's a small countries, but we make progress. It's the same. Some days ago, they decide in Norwegian Parliament decide to put their big funds, to divest in the oil companies. So it's a very big signal to the global green finance, okay? It's very important because it's a big one. Pension fund Norwegian is always invest, because Norwegian is the third exporter of oil in the world. So it's crazy, but this parliament decides that the main on the pension fund have to decrease and totally at the end in the oil company, okay? So we make progress. So there is at the beginning it was more environmental dimension, but now we can progress. What's the problem? There is some challenge, at the time we have some people, we are skeptical. They say that when we speak about investment sustainability, it's for maximization of the value. It's a kind of marketing, public relation, or greenwashing, some criteria evaluation are not so pregnant. You know, we need more data and clear data. So for that, we need to convince company to provide data and to give the best. Okay, and the rating agency too. There is a lot of rating agency around the world, but there is also concentrate. We can speak about that. Arrays between after it go to Vigeo. Vigeo make some of disposal, acquisition or disposal. I don't remember with Aries, and now they save to Moody's. You know, so the French agency rate go to United States for 2 months ago now. It's the same for Beyond Ratings. Beyond Ratings were just by the London Stock Exchange. So, you know, a small agency being bigger with a traditional financial agency. I'm not sure it's good ideas, you know. I'm not saying so. But I hope there is not so much interest, conflict interest at all. But we need some reference standards and specialized data to progress. So how we can move? We were very pioneer in France. For example, we oblige company to make reporting in 2050. Okay, 2015. Sorry. We need more now for European too. You have to provide reporting, but we need transparency. That's we call the corporate social responsibility, because at the beginning it was mainly from environment approach, but we need to be more social too. You know, human is very important too for the company. And for my part, what we have to do is to study this company, where they go, and to invest before they improve their change in this profile, okay? Before the market realize that they recognize that they make something brilliant, okay? So you have to take a fruitful dialogue with the company. You know, I'm very disappointing too. When I was a financial analyst, I go everywhere. I just in charge for the France at the beginning, everywhere in France, to see the company and their to visit the capacity and the tools to have contact with the humans and salaries and everybody. And now financial analysts are always behind their screen to find some news on the Google or studies by the brokerage activity. We need to make a dialogue, and this dialogue is very important to understand how each company wants to increase their criteria in its ERG. Okay. So why, for me, it's important to address this criteria? You know, we'll see after, but you can identify this criteria to better understand what is your economic performance in the future. Okay, maybe you have to invest today more. You know, maybe if you want to decrease the carbon footprint of the cement activity, you have to increase your costs. Actually, the Boston Consulting Group says that you have to increase 50% of your cost if you want to decrease your carbon footprint in the cement activity. Okay, so that's huge. And when financial people saw that, they think always, oh, my margin have to decrease. It's awful. No, maybe it's awful on a short time, but I'm a long time investor, no? Okay, so it's better to invest now and to protect my business in the future, okay? Because you will see there is a lot of risk of reputation, risk of regulator and everything. So, also, I have a lot of many examples. For example, the first time I worked with Geneviève Ferron and this head of analyst, he was nice guys. I say to him, I didn't know, for example, you know, there is some problem in Japan with the, sorry, I come back to that. I would like to have some data. We explain to me where are the systemic tools for a company. You know, I didn't know if there is a problem, a human problem in Argentina, if this oil company have secure its installation in Africa and is in a total respect of the local economy. Okay. And we don't saw that in the document provided by the company and the final reports, you know, finance reports. So they help me and they help everybody now in this direction. And it's very important to address because it's a lot of a risk factor, you know, and it's better to anticipate all these risk factor before the risk happen and the market go down. I don't know if you know that recently, for example, the Standard & Poor's 500 ESG, okay, index decide to put out Facebook, okay. It was huge because I think it was 1.5% of the index, so it's big. I think it's also 2.5 those classical Standard & Poor's index. They decide because of they fail on the transparency. They use personal information. And they decide to deranking the company. If I may, I think it's, you know, on a scale to 0 to 100, Facebook now at 21. I put, I think we have some in the appendix, something on that. Yeah, it's here. You can see the problem for Facebook was not on the environmental for sure, but it was on the governance and maybe on the social aspect. Okay, that's important because directly on the market, the stock goes down for 1 month. It was very important to anticipate how Facebook manage its different criteria to outperform if you have made the right choice. Okay, so we come back. Okay, we were there. Okay, so it's a huge and complex challenge, but you know that's I'm very optimistic now. Why? I'm my first idea is that millennials, you are young, and you want to invest in segments very involved in sustainable. That's great, you know. Morgan Stanley make a lot of studies on that, and you reconcile the financials with sustainability, okay? And it's interesting that 75% think that their investment can influence climate change. That's great. Thank you. Why I'm optimistic too? Because when you speak to skeptical guys or people, they say it doesn't perform. It underperforms their category. It's not right. this category of sustainable investment funds outperforms their categories in all funds, equity, fixed income, and alternative too. That's very interesting too. So actually, where we work on three aspects. Okay, the landscape is we have some funds we work on ESG consideration. Okay, what's that? It's use external data, you know, for example, Sustainalytics, MSCI, Bayer ratings, Robeco SAM, okay, and to put some rating and ranking. Often people want to make a ranking of their funds at the end of the day. You know, they don't think they must choose the company or the corporate with the consideration, but they ask for a rating of the whole portfolio, okay? The second one is the ESG integration is my favorite with the third one, okay? Because you totally integrate the criteria in your process, okay? You have process very clear. You can make a top-down process, you know. You want to be macroeconomic approach with sectorial approach or geographical approach, but at the end of the day, you study the quantitative criteria for the company, but also qualitative. And in the qualitative, there is also quantitative, you know, because you need the data to better understand how it works with the management, with the human and the environmental approach, etc. Okay, that you totally integrate, and after you have a rating, you can decrease your selection and find your total portfolio in accordance with your mining. Okay. The third one was impact investing. Is maybe it's more recently. Okay, it's the future for me, but it's difficult, you know, because impact investing you have to measure the impact in a total financial return of the action of the company. It's difficult because we don't have so much data. It's not possible to address what is the real impact in its business for a multinational like Unilever, for example. It's more easier to work with, for example, a startup, okay, or a new company, a small one, because they put it in the process. They decide to create a business because they want to have profitability on this impact. Okay, so it's a future. Okay, we find a lot of impact investing in a private investment group too. And the last one is sustainability theme investing. You know, a lot of banks and asset managers decide to launch specific theme like demographic theme, clean energy theme, green tech theme, agricultural theme, everything. That's for specific, but after you can make asset allocation to put in your own portfolio everything. Okay. Yeah. Actually, you see that the ESG integration is my favorite. It's must use, but impact is also great. Make great evolution now. Okay. What is my philosophy? We have to evaluate a company degree of sustainability because there is a lot of risk. Okay. There is physical and operational opportunity, but also risk. Okay, maybe there is some problem in the infrastructure, on the raw material, labor management. You have to consider all of that. There is also market risk. You know, sometimes a regulator or states decide to stranded asset, okay, for the fossil fuel, for example. If you don't anticipate that, your all investment go to zero. You lose your asset totally, okay? And I prefer to anticipate that, for example, Norwegian funds, pension fund decide to go out of the fossil fuel and to be not invested in this company before they do, because when they decide to leave, many of the stock go down, okay? And happy they take this decision, even if difficult, because you have the humans problem also. You can also have financial risk, and for insurance, for example, reputation is very important. Reputation, remember, in the past, I used to study SAIPEM. You know, it's also fossil company. We help big company in the fuels to extract oil, okay? And we know that there is some alert in their criteria, social criteria, and also environmental. We decide to leave the stock and to sell the stock, and we are very happy, because 3 months after an accident arrives in Algeria and the stock goes down by 30% decrease, okay? So it was good for the portfolio and for the clients too. There is regulatory risk, but you know, maybe tomorrow we decide to put a lot of taxes on the carbon footprint. Okay, so it's regulatory opportunities or risk. And for my part, actually, you can see people speak a lot of best in class. They prefer to invest in companies that are the best, okay? They are at their target, okay? The objective or the criteria in sustainability. For my part, I prefer to have discussion with management and to understand where they want to go. So I prefer the best in trend or the best in transition, okay? It's very important, because if they are in a transition, that's for me, that they are also in their transition, in their accountability and their P&L too, and the margin and everything. That's very interesting. Yeah, so company will see that cannot longer ignore that productivity is predatory for the planet, nor that social inequalities and that destroy society, so their future. Yeah, so states make some good decision in the past. You have an example of the United States Nation Global Compacts. They decide to put some right principle, international labor standards, environment, and fight against corruption. Okay, so they write 70 goals for each member of United Nations. Okay, this one. Okay, so no poverty, equality, parity between male and women, zero hunger, no famine. Good health is very important to have healthy, okay? Quality, good education. You know, we study in all the book that when a country wants to increase its economy, its growth, it needs to have education, and always the education with small girls that the country goes up is very interesting. They're working on that. Clean water, sanitation is very important too. That offer a lot of opportunities for some companies too here. Clean energy, there's a good big debate, but we speak about that after. And decent works, yes, economic growth, because if you are okay at your job, okay, you are more predictable. Innovation, okay, is very important. Reduce inequalities, sustainability, cities and communities, and everything, climate action, peace, okay. So you will see it's very interesting. And actually, all big companies in the world address these goals. Okay. So there is 3 letters, E, S, J. Okay. For the E, it's a transformation or acceleration in climate. Okay. So because we want to penalize those companies, we did not publish their carbon footprint results. Now you are obliged to provide your carbon footprint, okay, result. If you don't do that, I can have a look on your process and I don't want to see this company. I have to penalize those who are not transparent, okay, and those are opaque companies, okay. So we want to promote this transformation acceleration in climate, okay. You will have some in appendix some slide interesting on that. Okay, you are where you are actually. You know, we have to decrease 2 degrees Celsius rapidly if we don't want to go in a big crash, like say John F. Ferron ecological crash. For now, if you see on the recent statistic, it's huge. We have not decreased. For example, last year we have increased our carbon footprint in the world by 2%. So it's a problem on that. We need to make something very important. I put here the scope definition for carbon footprint. If you don't know exactly what it is, there is 3 scopes, okay? The direct scope is what you provide. You are a company, you provide carbon, okay? The scope 2 is indirect, okay? You use electricity, coal, everything, what you provide in your process in carbon. And the scope 3, it's more difficult to have a lot of data. We have a lot of progress to make on this direction. It's all the scale, you know, what your transporter product of carbon and what your clients, when they go in your boutiques, provide on carbon. What is this carbon footprint too? So it's very interesting to have all the scale, okay? So actually there is a huge problem because we have to make an acceleration on the transformation of the climate and to sanction the companies didn't make their job, okay? It's the same for the social transition. You know, it's more recently that people speak about social transition. It's important to see if you have local job, okay, what is the turnover of the personnel, if you have big turnover or low turnover and why. Sometimes it's interesting to have big turnover, you know, but if you give formation to the people to create their own company, okay, what is the work injury rate? How you are trained, you give training hours to your salaries, okay? And which percentage of capital base are owned by employees, you know, to try to sensibilize your employees to have your future and their business and their future too. Is very important for me. The third one is a G. It's governance rules. You know, governance rules, for me, if there is no governance in the company, don't take care of this company, okay? Normally, it's a base, okay? Company works well when there are independent board of directors, okay? Segmented management rules, CEO, president, okay? Is there compensation policy? How is made? Is there parity? That's a problem. Actually, there is not parity in the company. We make progress, but not at the high level of the management. It's the same in the financial world. You know, I was very lucky. I had a lot for that because I was occupied chief investment officer last year for 14 years. But you know, there is not a lot of female women in this financial world too. And is there anti-corruption programs? You know, is very important to anticipate risk too. We speak about that. Okay, so now we have to convince the clients, institutional investors, and to make the money in the portfolio and to invest in this company will provide good progress. Okay, it was very disappointing. I was very disappointed because in the past we make some progress. We speak about the reporting. In France, we put this law in 3 years ago to ask the corporate to provide reporting on what they do in their portfolio investment for the planet and for the environment and criteria, etc. But the problem is was not very restrictive. It's just you comply or you explain. You know, it's you declare, but you are not doing. Okay, so it's not very. We have to progress on that. It's the same. Some days ago, the ESMA, it's a European regulator on the financial market, decided to ask all the asset management company, banks, and everything to explain to the final clients what is the risk and what is the opportunity to invest in extra financial company, extra financial and sustainable company. You know, there is a lot of work to do because a lot of asset management companies are not ready on that. Okay, so there is maybe a new job to address. Okay, on that. I like this words of source carbon 4. You know, is Jean-Marc Jancovici is always speaking about climate, and he says that everybody has a short-term vision, and we need to have a long-term asset vision, okay, to increase the appearance, okay, of physical risk. So we see that there is some optimistic approach with the millennium, okay. You want millennium to consume and invest totally in a different way. That's very interesting. And the female too, you know. And interesting that little or no interest, someone interested is mainly investors, actually. It's a recent study. And when you ask to the woman what she wants, it's for 59% poverty and income equality, and 53% access to health care, and 49% climate change. So it's interesting and optimistic view. I'm proud of that. So what's that? Alors, yeah. We want to speak about impact investing. Impact investing is when you want to make sustainability and profitability in the same package. Okay, you decide to produce something to make service or production for with a positive impact and a profitability impact. It's very difficult to source that in the multinational or big company, you know. That's why we find a lot of progress in impact investing in listed stocks or private debt, okay? But when you invest in this private debt and listed stocks, you have a problem of liquidity. Cycle of investment are less liquid, okay? If we take a green bond, for example, it's the same, but you know, green bond is the same as classical bonds with coupon, maturity, and final repayment. But there is a different aspect, is to use the amount raised to back to the project with a positive impact. For example, financial solar or wind farms. But it's a future for me, and I would like in my future for me to work a lot on that with a lot of people interested in that. So you say that all the scales where we are. At the beginning, general investment was purely profitable, purely for profit, you know. That's why then when I began my career. And we invest in responsible and sustainable investing, okay? And after we go progressively to thematic funds, we see that green bonds now and loans, impact private equity, impact venture capitals, okay? And we progress now also with there is charitable donation, seed capital donation that we want to do with interdependence. I would like to now to go to my clients, institutional investors, and to explain that we want now to progress and to invest in very sustainable and local and circular economy project, and to invest in these projects with them. It's a disruptive financial world. Yes, we go to the conclusion. So, if there is an emergency, okay, everybody is concerned. We have to double cost in a company to make progress. We have to do that because the future will be better. We have to explain that to in your stories to the financial investors. Don't have a look on the short time to see if the margin decrease of 0.2 percentage. We don't care that. The impact in the future is better. And the return on equity will be better for the planet and for your investment. We need a circular economy, okay? Because actually we are mainly in the linear economy. You know, we are in extraction, production, use, and throw waste and everything is not good, okay? We need to have a circular economy because waste have to be in a transition and transformation to become your new resource for the future. And all actors are called to take part in this transition. Is very important. I like this. Some people, you know, Antonio Guterres say before the first COP21, you know, in Paris, COP21, we want to decrease the carbon footprint urgently. Nobody progress in that. Some, like Finland, or you can see in the appendix, I think I can, oh yeah. You see that Nordic countries and Croatia have outperformed their targets, 2020 targets, but you know, it's yes, it's mainly in European sectors, and it's small countries. We have to do a lot. If you have a look on the France, for example, even on Netherlands, France, or Germany, we have a huge way to outperform our targets. Okay, that's the main problem. And I don't speak about China, India, or United States, okay? That's a problem because the emerging markets actually are, since some years, in economic growth. So when you are in economic growth, you consume a lot, and you consume a lot of energy, so you increase your carbon footprint. So maybe, I don't know, it's very, you have to be happy on that, but normally in this year, the economic growth is anticipated to be around 3%, or just around, yeah, 3% in the world. But if there is some recession in the next year, for example, some economists say that maybe we have a recession in the United States next year. Normally, we we'll see that we decrease our carbon footprint in the world. That's, you know, it's a rich problem. So it's urgent to make something, okay? And like say Paul Polman, CEO of Unilever, you need to know as much about climate change as you do about your cash flow. You need to know as much about international development as you do about business development, okay? So it's important for me. So in the appendix, you have the whole EHG ecosystem, okay? I can, if you have some question, Facebook, we see the carbon footprint, the scope. Yeah, you can see that the 5 most emissive segments account for 50% of emission. You know that it's mainly for fossil fuel and chemical products, but also construction, okay, with cements, coals and everything, energy, and trade, service, and equipment too. And if you have time, read this document for the CEO of Saint-Gobain. It's interesting because in these companies they make a lot to make sustainable home and construction very sustainable. Okay. Yeah, maybe I have finished. I don't know if you have some question.
Oh, thank you very much, Isabelle. Does anyone have any questions they'd like to ask about anything that we've been through there? That was all really enlightening. Andrew, what's this, as opposed to an external auditing process?
Sorry?
I'm just reading Andrew's question. Well,
okay.
I'm not sure if it is a question. Scroll up a bit. Where am I going to? I don't see anything other than 2 as opposed to external auditing process. Do you mind writing it again, Andrew? Sorry to be annoying.
On the sorry, I cannot understand your question. Sorry.
It's okay. I just asking Andrew to.
Yeah. What you want?
To write a question again. I have a question from Ali.
On the data. Yeah.
Yeah.
Yeah. Yeah. Yeah, that's a huge problem, you know. We need standards data, and how we can be sure that it's sustainable data and real data. Yeah. Actually, in France, we developed some scientific process. I don't remember the name. It's EST, something like that, I think. Where some scientific people test all the data and give their mining. They control all the data to see if everything is okay. A lot of asset manager wants to give their own portfolio to this kind of corporate, I don't know the word exactly, to see if there is on the right, if they are in the right way, okay, to control everything. But it's really, you are right. We need to have a standardization of the data and control. Okay, but normally, for example, if we have a look on the carbon footprint, because I launched a carbon footprint funds last year, we launched with an agency, a rating agency, and we control our data with another one. It was very conform, you know.
Mm.
It was okay for me.
Okay, yeah. And Ali also asked, what do you think about open source data?
Open source data, yeah. You know, the problem for me is you know, actually ranking agency, which are involved to control the data. They ask for data 1 a year, okay? They send some questionnaire to all the company, okay? And if the company, and after they receive the questionnaire, normally extra financial analysts have to go to speak with the specialist in the company who is in charge of the sustainable data, okay? We have a lot now in the company, even in a small company, to see if it's okay with the questionnaire. And they compare all the data with their peer group.
Okay, right. Yeah.
And if there is distortion with the peer group, they come back to the company to engage a dialogue to see what's happened exactly. That arrived in the past for me when I worked with RS. For example, clients, which was for me a huge company in this way, give me a call and say, Isabelle, we don't understand. We receive our ranking from RS. It was at the beginning, and we have not a good ranking. What's happened? And I see that they have not give the great data in the questionnaire. So they make a discussion and everything will be okay after. For me, the problem is that the ranking agency have a problem of profitability themselves.
Yeah.
So because so you need money to collect the data, and normally you have to when you are an asset manager, you have to pay to have the data. It's complicated. Actually, it's expensive for small company, for small asset management company. It's too expensive. We have to decrease the price of that, okay? And I think that's why when RS come to a new company, which the name was Vigeo, I don't know if you know Vigeo. Vigeo, Geneviève Fern leaves the company and Nicole Nota come in the company. Nicole Nota was very well known because she was the head of a French well-known unions, okay? And she come in the company with his personal notebook, okay? And the process of the agency move. So they are consultants, so they provide direction to the company, and also they make ranking on the company. That conflict of interest for me. But they need that to be, you know, to be sustainable by themselves. That's why I think all the small agency rating wants to be in big models. That's why Vigeo joined now the Moody's group. Okay, that's because Sustainalytics was Sam Robeco who will be on ratings the London Stock Exchange. Okay, so but we hope everything will be okay.
Yeah, it seems like it favors the establishment rating companies. Like the data like gravitates towards them, and they have more control, they have more say. because of their
Yeah.
historical position.
Yeah.
They make the rules. Yeah, Andrew's asking, would removing financial quarterly report requirements help companies to plan more for the future? So removing this idea of quarterly reports, make them a bit more long-term thinking.
Yeah, quarterly reports. Yeah, yeah. You know, you can make quarterly reports on some criteria. For example, yeah, I have to close the chat. Yeah, maybe here. Yeah, it depends. You know, because if you want to collect criteria on climate, it's huge. Okay. But on social transition, for example, you know, because it's more easier to have quarterly criteria for sure. And for us, for my part, we follow this quarterly criteria. Okay. But at the end of the day, it's not very, you know, you have to follow tendency on a 3 or 5 years. Okay, because maybe you can have an accident, punctual accident. But what is interesting to see if there is a transition, you know, the trend on a 3 or 5 years. Okay, so and you know, if you give too much data on a quarterly basis, I think there is more speculation on the market too. That's not very good, because you penalize the company, you know, with more volatility always on the market. I'm not a fan of that.
Okay, yeah. We've got another question from Ali, who's asking, could a public investment bank act as a first mover and undertake the initial risk that will encourage other market entrants? So I suppose
On the marketing.
Yeah, I suppose this is something similar to what's being suggested in the UK by the Labour Party for like a green investment bank or a green infrastructure fund that acts as a first mover to encourage the rest of the market to I mean, as I understand it, the state already takes quite a lot of risk. I don't know what your experience of that is, but it seems like the state actually already does underwrite a lot of risk for companies, especially in sectors that are regarded as socially or environmentally important.
Yeah.
They guarantee profit. Like nuclear is a good example, right? Nuclear. They guarantee a certain price per kilowatt hour. Yeah, I don't know if you...
Yeah, I'm right with. Yeah, I'm agree with you. You know, it's a total paradox, because after the financial crisis, we want to protect everybody, so we put a lot of regulatory on, for example, financial and insurance sectors. Okay, so we put new rules, so we stop the investment. Okay. If you want to decrease the risk, you decrease the investment. You know. Yeah. You know, it's the same when you decide to put your budget. You know, the etatic budget to 3%. If you said I want to go down to 2%, what's happened exactly? It happens that you decrease your investment. That's not good. So banks and insurance decrease. They decrease humans. You know, a lot of people go out, and I don't think they invest in the right way. On another aspect, a lot of companies decide to address green bonds, but take care of that, because for the first one, someone not very famous and not very controlled. It's better now, okay. And I think maybe we'll see in the future what's going on that. It will be interesting.
Yeah, Yeah, one last question from Andrew, I think. Do companies need more products, securities, or funds which they can invest in order to hedge against ESG data harming their share price?
No, I always say to my clients, that in
Mm.
20 years to progress, but actually the progression is not lower, it's accelerate. And I think we have index for sustainability, but in the next step, the classical index for me have to disappear. Okay, we don't need index normal. We need sustainable index, like financial analysts have to put in their own process all the criteria. Okay, it's not the case now.
It's further up the chain. Yep, I see. Yeah, it can't just be a product later down the line, maybe.
Sorry, I can hear you. Yeah.
Sorry, I was just agreeing with you. I wonder if maybe Andrew is.
Thank you, Andrew.
I wonder if Andrew is perhaps getting at maybe the offer that interdependence is looking to make, perhaps to institutional funds or to activist investors or people who are looking to fulfill their ESG goals or mitigate or hedge against them. Whether there may be a gap for some sort of interdependence product, perhaps based around the bond sale, that could be issued as a hedge against the kind of collapse that we're all worried about. If that's a kind of like, there's perhaps an opening in the market for that.
Yeah. It was interesting for interdependence for me to go to investors, institutional investors, and to say now I would like to speak about donation, and even if it's with a bounce, okay, with and return on your equity and your investment, but in donation, and I know that some are very interesting about reputation, and it's great to say, I have put money in the new project, very successful and maybe sustainable project. It's for my reputation is good. But also there are a lot of people who take care of that. For example, insurance or reinsurance are very focused on that, okay? Because they are on climate risk and also and human risk too. So that's the first I go to see to explain the project, and there are nice sensibility on that. Also on family office, a lot of big, well-known family are want to be a philanthropic investment, and I hope we convince we can convince them to put their money in this project too.
Yeah. Oh, me too.
That's why I'm here.
Yeah. Oh, fantastic. Oh, we're very grateful. Oh, thank you so much for your talk, Isabelle. It's fantastic.
No, thank you. Sorry for my English, not so free, but.
No, put the video up online.
Happy to help.
Oh, fantastic. Okay. Yeah.
Okay.
Great stuff. Thank you everyone for watching. We'll be with you tomorrow. I think we have a couple of sessions tomorrow. Okay.
Okay, I follow you too. Thank you for everyone. Bye bye.
Okay. Ciao.
Ciao.